We have an update on the Clarity Act as well as some of the hottest clips that I found on X, all brand new. Let's just jump right into it so you can be caught up with what's about to happen in the crypto industry. The White House schedules the next Clarity Act meeting for next Tuesday here. Big banks attending, CEOs still out. The White House has locked in a second stablecoin plus market structure meeting on Tuesday, February 10th. And this time, major US banks will officially be at the table. I think before it was more like associations that represent banks were at the table. Now you're actually going to have the big ones here. Just like last week, there will not be a CEO level meeting. Instead, it's a policy showdown between senior policy staff from big banks like JPMorgan, Bank of America, Wells Fargo, and city level. And so tier one banks, and then crypto industry trade groups like Blockchain Association, tied to firms like Ripple and Coinbase. So this Blockchain Association firm that is going to be speaking on behalf of Ripple and Coinbase, it still doesn't look like someone like you or I are represented there, but all good. This is what is happening. White House officially is trying to force a compromise. What they'll be fighting over is, of course, stablecoin yield. And here is a great explanation of why they are fighting.
I think banks have two issues. One is historically, they've been terrible sharers of yield. The second thing to keep in mind is that with Genius Act, stablecoins have to be fully reserved. But banks' business is fractional reserves. Banks' business is lending. Stablecoins are kind of inherently under Genius incompatible with the business model of banks. And that's where obviously they're spearheading tokenized deposits, right? And they're saying we want to stay on a fractional reserve basis. If stablecoins can pay yields, they become super attractive. If they can't pay yields, they're far less attractive to everybody, which gives them a better chance of pushing tokenized deposits. Where I think this ultimately ends up is you have a lot of different types of banks as well, right? You have like consumer-focused banks, you have commercial banks, you have central banks, et cetera, et cetera. I think we're gonna have different types of products at those different levels. And I think commercial banks, we should think of as tokenized deposits. And I think that's how they're gonna interact with each other. That's gonna be how they settle. That's the world they're gonna live in. And then when we get into more consumer-centric banks and we get into moving money in and out of the system versus around the system, that's where stablecoins will live. So tokenized deposits will form the inside of the system, and then stablecoins will then form the perimeter of that system for making it interoperable with the rest of the world and the rest of the blockchain ecosystem.
All right, I'm up early recording on a Saturday, so if you get any value from this content, I'd appreciate your support with a like and maybe even a comment. Imagine doing both. That'd be so incredible. I hope you're having a very great weekend. Let's continue with this Anthony Scaramucci clip about what's going to be happening with Bitcoin and the crypto market.
One of the real gatekeepers here is the Clarity Act. I think there's a lot of fence sitters, institutions, commercial banks, and otherwise that are really not going to move on Bitcoin until they get clarity from the U.S. government. And so
makes sense.
I think it's a coin toss now whether or not that gets approved. Some of the Democratic senators I've spoken to say that it will, but I think that's one of the big gating factors here. And this is typical volatility for Bitcoin.
Okay, here, check this out. This is a midterm year here in the United States, which means it's an election year. And so you're going to have people from the House up for election and some of the Senate. And if Democrats do not want another overhang of having to deal with crypto again, so getting this across the line will actually help them in the midterms, because they're going to have to say, why did you vote? You know, they're going to say, why did you vote against crypto again? And then people like you and I might be frustrated with Democrats because they killed crypto once again in this country. And then we're going to have to deal with that, right? And so Fairshake has $193 million. That is the super PAC that Ripple is a part of. They give money to candidates that are pro-crypto on both sides of the aisle. So if they want some of that money, you need to, of course, show up and make sure that this gets done for the people in the United States. When you have 60 million people that own crypto, you better believe that those people are going to be voting with what they think is best for them in the future. And so I believe that this is the reason that this gets done in the next few months. And so here is Cypress Research Labs. Banks aren't doing tokenization. They're choosing between three different money models: stablecoins, CBDCs, and tokenized deposits. Over the past year, real-world deployments made this distinction clear. Stablecoins, bank or consortium issued, sit outside deposit liabilities, built for programmability plus global rails. SG Forge, Euro USD, Quivial's Euro stablecoin, BNY custody for issuers. CBDCs now, sovereign money, two-tiered distribution, banks as intermediaries, not issuers. And then example here is China's ECNY is already live at scale. Tokenized deposits, existing bank deposits, new technical form, balance sheet money, on-chain settlement, HSBC tokenized deposits, JPM coin via Kinesis and Base. Same word, tokenized, very different legal, regulatory, and monetary realities. 2026 is the inflection point. No, not more pilots, real integration, trade-offs, and evaluation of which model fits which use case. The question isn't if banks are going on chain, it's which money will they put there. And so here's kind of a good visual example of what's happening here. Issuer, payment networks, settlement liquidity layers, fintech infrastructure providers like Ripple, like Circle, Coinbase, like that. And then control and programmability, and then balance sheet, and then tokenized deposits, stablecoins, and CBDCs. I thought that was a great example. Now, here is everybody's not favorite person in the world. Kramer, let me go ahead and play this.
Do you think that the president is going to fill the Bitcoin reserve?
I don't know. That will
Well, that's
be
what I
a
heard at
big
60.
deal.
I heard at 60 he's going to fill the Bitcoin reserve. You better cover. This is the level.
Meantime, whether it's Bitcoin, strategy, even Palantir, Jim, the notion of a Democratic House, and according to Axios this morning, maybe a Democratic Senate. What happens if policy starts becoming a headwind, not a tailwind?
Well, look, it could happen. I just think that what's amazing to me is that the people, the Robinhood people, the Coinbase people, they have lost faith. And I think that they have not lost faith in gold, maybe even silver, because silver is not a storehold of wealth. But gold has turned out to be what everything was worth in the end, gold.
All right, let's keep it going. Here is Raoul Paul on Bitcoin.
The weaker dollar is one of the biggest indicators of liquidity as well. So for me, it's all here. It's just a matter of waiting for a catalyst of which to take this all off, because I think the market is currently trading at a discount to liquidity conditions, and at a reasonably significant discount. So, you know, if you were to close the gap versus liquidity, Bitcoin should be where we are today. We're around 90,000 as ever, doesn't move, and it should be sort of 140,000. So there is okay.
Bitcoin went down to 60, then it came back up to 70. Should it be at 140,000? I think there's not a lot of liquidity in the markets right now, as he said, and you know, retail is kind of spent at this point. I think October 10th was a big signal, $19.5 billion lost, and people just don't have the momentum to push the market up. You need institutional investment, and more institutional investment won't come without the Clarity Act, it sounds like. Arthur Hayes on why Bitcoin suddenly dropped. Arthur says Bitcoin likely sold off because banks were hedging bets tied to BlackRock's IBIT ETF. He cited Morgan Stanley's structured note linked to IBIT, basically a bank-made bet on Bitcoin's price. When Bitcoin moves, banks have to quickly buy or sell to protect themselves, which can amplify big price swings. Hayes says that he's now tracking these products to see where the next big move could come from. We did see over $10 billion worth of volume in IBITs. The day that the whole market went through that crash, we did see over $10 billion traded on BlackRock's IBIT. Now here's Anthony Scaramucci talking a little bit more about Bitcoin and strategy and what we can look for.
Oh, listen, there was a moment of euphoria last fall when Bitcoin got to its all-time high. I turned to one of my partners and said, we'll likely get to 200,000, but my guess is we'll test 70,000 before we get there. And he looked at me like I was crazy, but that's the nature of Bitcoin. This is still a very early adopting asset. I've been on CNBC for the last 5 years talking about Bitcoin, never calling it an inflation hedge, never calling it a dollar substitute or digital gold, but calling it an early adopting technical asset that has money-like characteristics and gold-like characteristics. Goals. You were looking at a retest somewhere at the 38,000 level. Now, it did hit yesterday the 200-day moving average, and it seems to have held there. I also like the fact that the fear greed index, which is from 0 to 100, you're at 5 right now, which is like one of the lowest indicators that we've had in the history of Bitcoin. So there's overwhelming fear. But I think we've actually had a softer, believe it or not, Bitcoin correction as a result of strategy, the ETFs, some institutional buying. But remember, this trades on its last trade based on liquidity or illiquidity. And I'll take you guys back to October 10th. Lots of circuit breakers tripped at Binance. There was something like $28 billion liquidated very quickly. And it does look like somebody got blown out or margin called over the last week. I mean, you had a 25% drop in Bitcoin and today a 9 or 10% rise. So yeah, it's a garden variety correction for Bitcoin. We're still bullish. I frankly bought more Bitcoin yesterday. I intend on buying more Bitcoin next week, but it has been muted. And so this is the thing I always tell people about Bitcoin. If you don't like this level of volatility, this is an early adopter asset. Amazon went down 50% 8 times in its first 15 years of existence. That's sort of what Bitcoin is doing. If you don't like this volatility, you have to stay away from this asset.
Yeah, good advice, right? If you cannot handle the volatility of the crypto industry, best to just sit on the sidelines until we're a little bit more forward. But then you obviously take the risk of not getting in at prices where maybe that'll make a difference in your life. I understand that this market is still going to be very volatile until we get to a utility point. And that's what we're trying to get to with regulation, the guardrails, what banks and institutions and the private sector can and can't do with the industry here in the United States, the biggest financial market in the world. Once the guardrails are up, I do believe you're going to see a lot more innovation, and you are going to see finally probably some more utility pricing instead of speculative pricing that we've seen for so long. Now, there is still a ton of things happening with the Epstein files, and we're going to cover just this video here about this. Let me go ahead and play this Jungle Inc. clip.
The grand conspiracy, you remember that. We were saying, this seems unnatural. Something must be afoot, and everyone scoffed at us. Said, you know what? You can't corrupt a government agency. These are great people. Well, I just found, look at this, an email in the Epstein documents. You can see it on my X. Blow it up, read it real clearly, where he states he started a Bitcoin task force, and he had an insider he was meeting with, probably Larry Summers, I suspect, but at the Treasury, he was meeting with to implement their plan. What that may be, we don't know. But he says here that it's big, and it involves a group of people, and it involves the U.S. Treasury. Now, I'll ask you this. The U.S. Treasury, in my opinion, is a lot harder to corrupt than the SEC. We've seen the creatures that come through the SEC, from Hinman to Clayton to Gensler. Like, come on. If you think they are going to be harder to corrupt than the U.S. Treasury to implement whatever's going on here, like, it's all starting to come out, and it's going to continue. You just need to tie all of this to Summers, Hinman or Clayton or Gensler. Somewhere in those files, I'm telling you right now, there is a tie-in, and we're going to find it.
So guys, if you want to keep up with what's happening for crypto and with Epstein, Jungle Inc.'s probably one of the channels that I would recommend that you at least take a look at. He posts a lot of factual, real good information. And I know some people are interested in this right now. I'm trying to stay kind of, away from this because I know it's a very volatile situation, and there's been so many people hurt by this. I just want to play the clips. I don't want to be posting different things about Epstein. It's just not something I'd like to talk about. I want to talk about innovation. I want to talk about growth. I want to talk about Ripple. I want to talk about XRP. I want to talk about this great industry. And I think a lot of people are just getting real distracted by this. Now, this is some interesting stuff. I need to touch on this. Now, the Winklevoss twins ain't doing so hot these days. I want to play the clip, but then I need to show you some information about Gemini. Their expansion globally has not been going so well, and that's a shame.
So I think there's a lot of overlap in the companies, but one of the biggest, coolest products that we have today is the Gemini credit card. I actually brought our Bitcoin
It's an
orange
infomercial
card that we released in May, and every time you swipe, you can earn Bitcoin or any crypto that we support. And I think that people realize that
up to 4% back.
Up to 4%.
Yeah. And that's in crypto real-time rewards that hits your account every time you swipe the credit card and buy. So you could buy a flat screen and earn Bitcoin back, and in the future that Bitcoin could be worth more than the original purchase. So it's much better than...
How do you access that? Or can you, or do you leave it there, or do most people you find just leave it sitting there?
It's real time, so as soon as someone swipes, that Bitcoin or crypto is in your wallet, and you can then spend it or stake it. We think you should hodl it, and in some merchants, we're even offering up to 10% back. So if we think Bitcoin's a 10x from here, so your purchase today at 10% back is actually free.
That's what I have to
tomorrow.
say.
The reason I wanted to show you this is there are products like the Gemini card, like the Uphold Elite card, where you're going to get 4% back on your everyday spending. If you're going to go out and buy something anyways, to get XRP or to Bitcoin or other assets back is something that is just kind of free at this point. you should be using these products to at least get something and hodl that extra stuff. You can combine Uphold's Elite card, the 4%, with the direct deposit of 4% and get 8% back, right? So there are some things that you can do. If you want some more information, I did interview Roz, the Senior Vice President of Neobanking at Uphold. I think it was last week or the week before. It's all coming together here. And he gave some great strategies in that interview that you can use to just stack XRP right now. You should be using some of these products. If you're interested in signing up with Uphold, there's going to be a link down in the description. Please, if you're interested, do it. I have been. It's been awesome.
When I first heard about this, I thought that's a really interesting way, because it's the equivalent of, rounding up on every dollar you spend or something.
Right.
You're not thinking about what's going there, and you can save it and hold it. And it's,
Yeah, I mean, you're not changing your behavior. You're going about your day, but you're investing in your future. You're future-proofing yourself. And so that's super important versus cash is always depreciating, right? Cash is never going to be worth more in the future. And points, who knows what that's worth.
All right, let's keep it going here. I want to show you here what's going on with Gemini though. Gemini announced on February 5th that it's fully withdrawing from the United Kingdom and the EEA, which is the European market. All customer accounts in those regions will enter withdrawal only mode starting March 5th, 2026, with complete account closures by April 6th. So if you have a Gemini account and you're in this region, you need to check your account. You got to get your money off this account by this time. And the reasons they are pulling out is a few things. Regulatory friction, operating across multiple jurisdictions proved too complex and costly, especially with UK transitioning to stricter full authorization framework under the Financial Services Market Act, and then weak demand. Trading volumes in Europe and Australia have never justified the operational costs of maintaining these markets, and then operational overreach. The twins admitted Gemini had become overstretched trying to serve too many regions with slowed execution and a diluted focus. Now, there are companies that have been successful expanding into these regions, and there have been companies that haven't been successful. Make sure that you are paying attention. If you are on some type of exchange that's moved into a new region and you're taking advantage of whatever that exchange can give you, make sure that you're doing some extra due diligence to make sure that that exchange will be there to last. Not all will. Now, we do have one more clip that I want to show you here. I thought this was valuable to end here at the end.
The options market is huge. It's a multi-trillion-dollar daily market in terms of volume. Do you envision that coming on chain? Because a lot of the reasons why perhaps people can't get access to it or these markets aren't fully efficient is due to record keeping. Seems like DLT solved that.
Absolutely. I think that's one of the key benefits. Like every options market should and probably has to relate to something of the underlying. Right. So if you build a perp, it could be a completely synthetic product that has no relation to reality. But the normal case is that there's some kind of underlying asset that someone's making a sort of a bet on in different shapes and forms. Right. And that can be made conclusively transparent using technology. Right. So that you no longer have a question whether something actually has a nucleus of reality or whether it's just completely synthetic. By the way, both would be fine to actually make an assessment on, because one could move in your favor and the other not, right? But I like having something that is programmable makes not just the instant settlement of a trade, but also the instant issuance of new derivative products really efficient. Give you an example. If you have an IPO of a product, a lot of times in the financial markets, the derivatives traders would actually make bets before the issuance happen. What is the price range? And then they would actually scatter a little bit the price range in terms of derivative products to then have something that is there when the price reaches this level, that level, right? Because it takes a couple of days to build these products, because it takes a couple of days to actually get the regulatory approval of these products. If with technologies like this, you have an instant derivative creation mechanism, you no longer need that guesswork and that inefficiency. You can actually have the price land as an IPO land here, and then the derivative market actually immediately settle, and issue products that are sort of anchored around that price.
It does feel like some of this technology is being used to upgrade markets. The problem that we have is it's been very slow, and a lot of people want this to happen sooner rather than later. I'll keep you updated on this channel. Make sure that you're subscribed. You got the bell notification turned on. We're putting out 4 videos a day right now across the entire crypto space. If you like XRP, if you like Flare, if you like other assets in the isosphere and crypto updates, I'm your man. I got you. Have a great weekend. It's always a pleasure to spend this time with you. It's an honor. I'll see you in the next one. All right. Peace.